And I'll share my screen again. Okay, so we had a receivable figure of 21,000, which had gone bad. So we deducted from it. And then we have inventory, which had been purchased for 2,000, but it was damaged. So we take it out of our inventory because that means our inventory figure has been overstated by 2,000. Fixtures and fitting to the value of 16,000 were delivered just before 31st March. But these assets were not included in the financial statement and the purchase invoice had not been processed. So it means that we have a 16,000 to add our trade payable to, we purchase it on credit, so we have to account for it. And then we know that our labor costs that we owe, it has to be added, right? And then our tax for the year, we can bring the figure straight away. It is the figure that we've calculated here, 415. So that is 415. Okay, I think we are done the adjustments. We are not done yet. So our retained earning account, we know that retained earning, it is the opening balance plus the closing balance of retained earning for the current year. And then profit was overstated, or a wrong profit figure was recorded initially, and we had to make the corrections. So the corrections have to be reflected in the financial statement. So what we'll do is I will take out the wrong recorded profit. So the 1,012 that was recorded, we have to take it out. Okay, and then this year's profit, the one that recorded 967, will have to be added. So it means that we've taken away the excess profits that was included and shouldn't have been included. So we are done. We just balance our figures. So now use a calculator. 222728 plus 70 minus 74, sorry. This 74 is depreciation, so we have to take it out. It's depreciation, so we take it out. So 2728 minus 74 plus 610. That will give us 2670. Our current assets. So if we take our 2, so it's 1581. Our receivable figures, we have to close the bracket to indicate we are done with our additions. So 996 plus 34 minus 21. That will give us 1009. And then our cash figure, there was no addition for the year. Our cash figure is 26. It's 26. So we can underline this one to underline. Let's calculate our total current assets. 1581 plus 1009 plus 26. That will give us 2616. So we underlined. So now our total assets will be our current asset plus our non-current. So 2670 plus 2616. That will give us 526. So we are done with this. Let's come to equity share capital. There was no additions. So 750. Premium 2, there was no additions. So this is on the line, sorry. So 250. And then our retained earnings. So it is 1468 minus 1012 plus 967. So that will give us 1423. So if we add all that, 750 plus 250 plus 1423. That will give us 2423. Give us 2423. You underline this. So you underline this. Let's come to our liabilities. There was no extra debts that we took to finance our company. So maintain our 300. So our trade payable, there was no extra. So 1118 plus 610. Okay, so our trade payable, our other payable, okay, let's finish this first. So that will give us 1134. Okay, so our trade payable, our other payable, sorry, so it will be 417 plus 1, that is 418. 418. If we put our tax already, there was no additional overdrafts. So we called our 596 over here. So now now we are going to add our figures. So let's add our total liabilities is 300 plus 1134 plus 415 plus 596. Let's add them properly. 300 plus 418 plus 415 plus 596. So that will give us 2863. 2863. These are total liabilities. You can actually subdivide them. That's just fine. Okay, that will be just fine. With our total liabilities. Then we have our total equity. Right. Equity liabilities. So we sum up the total, okay? So that will give us the figure we had plus 2423. Okay, so that should give us 5286. Well, meaning our accounts as balance. Our equity plus liability is equal to our total asset. Thank you so much. So that's the end of the question.